Israel-Iran war, red hot, Nancy. You saw the president is on social media today. He was demanding Iran's surrender. You know, there's the risk when you ask this question, Nancy, that you can come off sounding kind of cold. But I'm just wondering if you think, as a longtime market watcher, does the market ultimately, Nancy, kind of look through all that? And as long as oil behaves itself here, and I'm looking at WTI still under 75, the market, do you think, Nancy, is ultimately going to just concentrate on the economy and the earnings? But what do you make of it?
I do, Josh. I was managing money during the period where Iraq invaded Kuwait, and you saw the market sell off. Then we kind of realized we were in a bit of a recession. As soon as we went in, at the U.S., that is, the market rallied, and it rallied hard. And it bothered people because it's war. But the fact is that your point is well taken and is correct, that investors are a little agnostic on these matters and are really more focused on the economy, on earnings growth, on the fundamentals. And we are in a pretty decent economy. Second quarter GDP from Atlanta Fed's about 3.8%. Now that's a bit of a snapback. So let's say we're growing about 1.8 to 2%. Earnings growth was pretty decent. Guidance was pretty good. The retail sales numbers, as Julie mentioned, Josh, were negative. But what was also going on last month was that the savings rate popped. So the very same reason that consumers were not spending caused them to save, and that provides a cushion, I think, as we move forward in the year. So if you really look back historically, consumers spend from their permanent income and they save the rest. The permanent income's still pretty good with average hourly earnings going up. So I think it's a pretty decent environment to be a stock investor.
Where does the Federal Reserve fit into all of this, Nancy? Of course, we are in the midst of a two-day Fed meeting. We're going to get a new dot plot tomorrow, presumably no change to rates. But given that you think the economy is doing okay, are you in the camp then that the Fed maybe starts to cut over the summer, or do you think they're going to wait a little longer to make sure that we're not going to get tariff-induced inflation?
Well, Julie, I hope this doesn't seem unkind, but this Fed has been late at every turning point. And I think that began when they shifted their attention to backward-looking data. So if you're driving your car looking through the rearview mirror, you could end up in the danger zone. And I think that's what's happened. They let inflation get out of control. And then that preemptive 100 basis points cut this last fall is mind-boggling to me, and it was to the bond market because you saw the 10-year rally 100 basis points to offset the cuts. So I think what I would say is that they will probably be late. They may already be late in continuing to cut, and I think they will come around in the fall, not over the summer. Do I think they should cut in the summer? I think the neutral rate would argue that the Fed funds rate is too high. And it's creating other problems. Like if you just think about who benefits and who is hurt from the higher rates, it's the consumer that's hurt, it's small businesses that are hurt. Who's benefiting? Banks who are shopping at the Fed's window. They're getting pretty hefty payments. And then, of course, the government is paying significantly more on the debt, which is no one's fault but their own, but it is a fact.
You know, Nancy, one theme for you I know for some time has been you want to find those old economy companies, as you put it, that are now pivoting to those digital new technologies, so AI and robotics. What are some examples of that, Nancy?
Well, so Josh, I've talked about Walmart on your show. That's the poster child. They're embracing all of the above. It's not just AI and cloud computing, digitization, but also robotics. But you recently saw that LVMH has said they're utilizing AI across their business. So think marketing, product development, supply chain management. I'm giving a speech on regime change. And if you look at a recent study by Cotu, they went and looked at humans providing client support versus AI, and the difference is over $2 per event. And then if you go out in the study, consumers are much happier when they interact with AI. So we're seeing it in pharma, we're seeing it in industrials. I mentioned LVMH. The Mayo just embraced pretty rigorously AI in the radiology department, and there was a lot of hand wringing that there would be fewer radiologists. They have actually increased the number of radiologists by 55%. So there is a lot going on that I think is very compelling. And we want to be at the forefront of that. We also want to own the providers of the picks and shovels and the infrastructure, which we do. But I think the shift is going to move nicely to a name like, for example, they report this week, but Accenture, that this may be the kitchen sink quarter, but we think long term, they're now a long cycle budgetary line item as opposed to a short cycle discretionary item. They are helping companies embrace AI, and the stock got hit. We went in and initiated a position. Pretty happy to be there.
And Nancy, when you talk about the picks and shovels part of this, there is perhaps no brand or company name more synonymous with generative AI than OpenAI, right? ChatGPT owner and sort of the thing that started all of this. There has reportedly been growing friction between OpenAI and Microsoft, despite their business partnership. How should investors be thinking about that situation and how it informs maybe how they're investing in Microsoft, maybe how they're investing elsewhere?
Yeah, I think Sam Altman has put himself in the position to be at war with a number of different individuals in Silicon Valley. Look, Microsoft paid $13 billion for 49% of future profits. Part of the deal was they would have an exclusive right to provide OpenAI's compute power and the right to all intellectual property. OpenAI is now objecting to all of that, and we'll see. I mean, they want to become a public benefit corporation. They need Microsoft to sign off on that, and in exchange, they want to give them 33% of the company. Satya Nadella is not a pushover. So I would expect to see the fight continue. I think the market kind of yawned today. Microsoft was down about 0.25%. So I think you stay tuned. If it does sell off, I think you continue to add to this name. We were adding before earnings. The stock's up about over 20% from that point, and we'll continue to hold it until we think this trade has exhausted, and we don't think that's for some time.
There were some skeptics, Nancy, who said, maybe 2025 represents kind of the peak, the high watermark of AI spend. As a longtime investor in that mega AI trade and trend, do you believe that, Nancy?
I don't, Josh. I think we're early innings. I mean, you heard Andy Jassy say we're kind of first batter in the first inning, and it might even be the first pitch. The hyperscalers did not cut back on spending after DeepSeek. I don't think it's because they didn't get it. I think it's because they understand they need to continue to spend to be leaders in this space. And so you're seeing a tremendous amount of CapEx. It will slow eventually, obviously, but I don't think we're there yet. And if you look at all the trend lines, you're seeing more and more companies adopt new technologies and they're mostly powered by AI. And just look at Oracle. I mean, it's the largest holding in our TGLR ETF, and they are talking about a backlog in demand that they can't even meet. And that's what all the hyperscalers said. They're supply constrained, so they need more chips from Broadcom and NVIDIA. And they need more infrastructure, they need more energy, and so we own a number of those names. And I think that continues for some time. May just be a few more years, but I wouldn't get off the bus yet.
Nancy, great to see you as always. Thank you so much.
Thanks for having me, guys.